Hey, my friends, if you're looking for a faster, a better way to grow and scale your landscape business, you likely don't need to join just another free Facebook group or watch another YouTube video. What you need is a proven, cohesive growth strategy for your business, along with the one on one coaching or group coaching and accountability to support you every step of the way. And that's exactly what the Million Dollar Academy delivers to you. The Million Dollar Academy is coaching, tools, accountability, and done for you resources for landscapers who want to take the guesswork out of scaling and growing towards a profitable multiple six, even seven figure plus business without all the stress and all the hours of agonizing of how do I get everything done? Or am I doing this right? Or what do I need to focus on next? The Million Dollar Academy is about thinking differently and thinking bigger about how to be a successful business owner. It's about more than just being good at landscaping. It's about how to create more profit and how to scale, all while relieving some of the pressure on yourself. We do have group and one on one coaching spots available. So if you want to go learn more, head over to milliondollarlandscaper.com/academy and get in there today.
We want to take a quick second to tell you about our friends over at Cycle CPA. I can't even express to you how important it is to have a good accountant on your side. You know you want accurate bookkeeping and financial statements every month. Instead, you're often left with limited time to focus on the accounting side of your business and no reports to show for it. At Cycle CPA, the landscaping accountants, they not only handle the bookkeeping, but also provide landscape industry benchmarking, job costing, financials by service line, advisory meetings, and much more. Cycle CPA has a team of landscaping accountants available to provide anything from bookkeeping to CFO services. Visit cyclecpa.com and for $100 off, mention the Million Dollar Landscaper podcast.
EasyBeezy is easy to use, easy to learn, affordable work order and time clock app with unlimited users included with every subscription. If you've ever struggled with the daily grind of keeping track of work orders, you have to check out EasyBeezy. Make and edit work orders anytime, anywhere you're working, at your desk, in your truck, on the job site, even on your couch. With EasyBeezy, you can easily copy work orders to use over and over, which is great for mowing and plowing. You can also keep track of employee timesheets, contact your customers, add notes, instructions, even pictures of your jobs. EasyBeezy works on Android and Apple devices or any tablet or computer. EasyBeezy also has a wide variety of reports so you can have all the info you need for billing right from your phone. Say goodbye to paying for extra users because everyone gets unlimited users on EasyBeezy. Try EasyBeezy for free for 30 days. Visit easybeezy.app/MDL to sign up. EasyBeezy is a simple work order and time clock app for mow crews, hardscape crews, and everything in between. Start saving time and money with EasyBeezy. Visit easybeezy.app/MDL to sign up today. Welcome back to Million Dollar Landscaper Podcast. Today, I'm super excited to bring back on our friend Carla Iniguez Policastro of Cycle CPA. She is better known as the landscaping accountant. So I'm excited to have you back on, Carla. Thanks for joining us today.
No, I'm excited to be on too. It's always a fun time to talk with you and talk numbers, right?
Yep, absolutely. We love numbers over here, so I appreciate you being on here. For those that aren't familiar with you, would you mind just telling a little bit about you and how you got started in the green industry and a little bit about Cycle CPA?
Yeah, my name is Carla Policastro, CEO of Cycle CPA. So we do anything from bookkeeping all the way to CFO services, and we just specialize within the green industry. And, I got into the green industry because I used to work at a small accounting firm where we helped everybody under the sun and didn't really focus in on any industry. But because of the town we were located in, our demographic was largely Hispanic based community. And a lot of those business owners, right, they own landscaping businesses and construction businesses. And so I got to know a lot of their pain points and wanted to help them out more. And I knew that the need was there. So when I decided to branch out, I knew that this was the industry I wanted to specialize in.
I love it. I do appreciate you being just mostly specific to the green industry. So I really like that. That's one thing. That's why we always recommend people that join our academy just to go to you guys, because you guys do an amazing job. You get their books back on track, and it makes it easier for me actually to help them with their estimating. So thank you.
Yeah, no problem. We're happy to do it. I always say we're cleanup experts at this point. It's just, or forensic accountants too at some point as well. So.
I like that term. Yes. Nice.
Yeah.
Nice. Nice. Well, today I wanted to have you on because I want to talk a little bit about KPIs, what they are, and why landscapers really need to use them. And something that I think it's going to be very important. I think this coming season, if it's if they are talking about a recession, if it would happen, I think it's really important for us to kind of track certain things. Would you agree with that?
Yeah, no, of course, it's important to track KPIs in just the normal business activities, but of course, with an economic downturn, you want to track those more closely and more frequently, as frequently as daily or even weekly. So,
Mm-hmm. Sure. So, what are KPIs, if you don't mind explaining what they are in general?
yeah, they're key performance indicators, and it's a way to quantify and measure a specific goal that you have for your business, right?
Mhm.
And basically, it provides a target for the business owner and the team or leadership to kind of shoot for in any specific area. So it could be on the sales side, you can have KPIs, operations, HR, any side of the business can have key performance indicators that you should monitor.
Yeah, and it's something like I don't feel many landscapers do. They don't monitor it. They're just busy working, especially if they're smaller businesses. They're just in the business and just working, 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 and as KPIs can just kind of get pushed to the side and not worried about until it's too late.
Yes, it's true, and it's important to track. It's important to track it because that's how business owners can make better business decisions, right? A lot of the times I see, okay, I just went off of based off of my gut feeling or based upon what's in my checking account or what we need at that time. But measuring and looking at these KPIs can help you make those decisions, because maybe you're making a decision for the short term, right, to help something in the short term, but you're not really analyzing and see how is that going to affect my business in the long term. So that's how that can help you too. And also with KPIs, you get buy-in from your team. Like it
Mhm.
no longer becomes about Carla and what I want. It's not, I'm not the company. It's Cycle
Yeah.
CPA, right? And it's not what I want, it's what the company wants, and here is what the business and how it's performing, and this is what the business needs. So if our maybe one of your KPIs is direct labor hours, right? Or revenue per hour. So what can we do in the business to kind of operate more efficiently? Now it no longer becomes about the business owner, right, and you telling them things. They have a scorecard and something that they can measure their performance against.
Yeah, and I think that's what happens a lot of times. They just fly by the seat of their pants. They just go by, like you said, the gut feelings, and I think I need to do this, need to do this. But you have those numbers in front of you, and those numbers don't lie, and it makes it easy to make a decision, whatever you're going after.
Yes, no, 100%. You can make all your decisions based upon your financials, whether you need to hire someone, purchase a vehicle, or add on a new staff member.
So, would you mind giving some examples of KPIs and kind of elaborating on those?
Yeah, I think so. One of the questions that I get most often from business owners is, can I purchase that piece of equipment? Can I purchase that truck? Right? Is this the right time? Do I have the right amount of capital to be able to um, spend this much a month on financing? Because you may need to finance, right?
Mhm.
So that's an extra $500, $800 a month, whatever it is, right? Am I able to afford it? Is this the right time? Should I make that type of investment? Because a lot of the time, when you're going to purchase a piece of machinery or an equipment or a truck, it costs a lot of money, especially in this
Mhm.
market. You're going to be putting down payment on it, and you're going to take out a loan for over 5 years. And even if you have the money to fully finance it yourself, right, it's still a huge upfront investment. So you want to make sure that, okay, I really need this piece of equipment, or I do need this vehicle, and it's going to serve me and my business for the long term. So
Mhm.
we look at a few KPIs to help our clients make this decision, right? It's not, that's another thing I want to say. It's maybe to make one decision, you're not going to look at just one KPI. You're going
Mhm.
to look at a few and then go from there, right?
Mhm. Yeah.
So I'll get into it. So the first one we look at for this is return on assets. So that's net profit divided by total assets. And what that's measuring is for every piece of equipment that you're using or vehicle, how much is that those items producing a net profit for you in your business? Are you using that effectively and efficiently to produce a profit? And so we want to see a good goal is 15 to 22% when you have that metric. If you're under that, I would say that okay, you still have some room for improvement, right?
Mhm.
For the machinery and equipment that you have in place already. Um, because a lot this industry is driven a lot on heavy machinery and equipment, right? And trucks. You want to make sure that you have a high return, like 15 to 22%, and you want to measure that. So another one that we look at is asset newness. I really like this one because it measures how new or old your assets are, right? Your piece of
Yep.
equipment or machinery is if you're buying too many assets and they're all new, then why are we going to purchase more, right?
Sure. Yeah.
As opposed to if you have a bunch of tired out junk, then okay, maybe it's time to upgrade. You're right. You're spending too much on repairs and maintenance costs and so on.
Yeah.
So um, that one is the formula is net fixed assets divided by gross fixed assets and non-current assets, which probably sounds like a foreign language to you guys. But it's more important to know what this means. So it's measuring how
Mhm.
new or old your current assets are, right? That you have in place. So if we see that this number is really high, right, then we're going to see that you're buying too many new toys. I would say,
Yeah.
right?
Sure.
Or if it's low, then that means you have a lot of old stuff in there. But you want to be between zero point 0.4 and zero point 0.6 for this metric. Okay.
So, Carla, real quick, where can they get this information? Where do they go? Like, where would they find this and what reports?
Yes. So you'll need your profit and loss statement and your balance sheet, and then you'll need to calculate this, right?
Mhm.
Maybe on a spreadsheet, on a piece of paper, but though you'll get your numbers from your profit and loss and
Mhm.
balance sheet. That's why it's important to have accurate financial
Mhm.
statements so you
Yes.
can calculate these things.
Yeah. I think that was a key term there. It has to be accurate. It has to be up to date.
Yeah, exactly. You want to make sure you're making a good decision based on current, accurate data that's up to date. Exactly.
So on those notes though, I guess you said, you can do this on a spreadsheet or what have you.
Yeah.
Because typically, like, you're not going to go into QuickBooks and pull up a report for those two things that you listed, correct?
Right. QuickBooks
Yeah.
doesn't have that functionality
Mhm.
to be able to do that. Right. So you'll need to, but you can pull reports. You could pull your
Yes. Yeah.
financial statements um, and get the numbers from there. You can have your accountant do it for you.
Mhm. Yeah.
It doesn't take, it's really, it doesn't take much time if you have accurate financials. But there are also other things that you can do. I'm sure there's software out there too that connects to your QuickBooks and is able to spit out these ratios for you as well.
Mhm. Yeah. Well, that brings up a good point too, is when you are going over your end of year stuff with your accountant, these are some of the things you can have a discussion with them about as far as like some of these KPIs. And then at least they can maybe help set it up for the future if you're not doing those already, correct?
Yeah, exactly. A good accountant, they should be tracking, not only tracking your financials because that's more compliance. You
Mhm.
need your numbers, they're there. I mean, they're not going to tell you that much. That's,
Yeah.
you need these ratios so your financials become a story and help you
Mhm.
actually make decisions. So a good accountant, they're going to meet with you at least on a quarterly basis and go over these KPIs with you. They're not just going to leave you in the dark. Here you go. Here's your numbers. Calculate it, and then you'll go from there. But yeah, that's what I recommend.
I love that. That's that's a good point there too. Is having a good accountant that's going to go over these numbers with you at least quarterly. Because I know in the past we had an accountant. It was only the tax time was the only time we went over there to talk to him, or we had some issues down the way. And that, like, to me, that's not the whole point of having an accountant. Like, you're the professional on this. Please give me some more information on this. And this is some of the information that you need to gather from them.
Yeah, that was my first experience at that small CPA firm where we just did taxes, and that was the model there, which is fine.
Yeah.
But when you have people coming in all the time and asking you these questions and wanting that information, I always felt limited in my time, and also I didn't have the resources to be able to provide that information. And but that's all we did is we pumped out tax returns. See you later. This is
Yep.
how much you owe. And we're structured differently because I know what that feels like. And we're more revolved around more of the advisory aspect, is what you would call it in accounting, is advising the business owners, meeting with them, going over the numbers, and making sure that we're issuing the financials accurately. So we can do that.
Nice. Nice. I love it. I love it. There any other KPIs they should be watching?
Yes. So two more for this category. So the next one is asset turnover. It's total sales divided by total assets. And so this is measuring your assets against the sales. So if you have enough assets to produce the sales that you have, right? So let's say that this year you have a sales goal, right? And you want to make sure that you have enough machinery and equipment, trucks in place to be able to meet those goals. This ratio is going to tell you a little bit about that based upon historical data. A good goal is to be between 2.5 and 5. And so let's say that you score a low number, then that means that you invested a little bit too much in equipment before you had the sales. So you may want to hold off before purchasing any more assets, right? But if you have a high number, then that's what we're wanting to see, and then you can be comfortable with purchasing another piece of equipment.
Nice. Nice.
Um, and that's what we're seeing a lot. It's okay, that's another question, I guess. Like, I have these two, idle pieces of equipment. What should I do? Should I sell it? Should I hold off and maybe advertise and market for more of those types of jobs? So sometimes, you'll have to make those decisions, so we have to like calculate this out, and also look at the market and kind of how it's trending as well. But the final KPI I have is your debt ratio, because if you do need to finance through Sheffield or Ford, whatever it is, right, you don't want to take on more debt if you're already over leveraged, right? So
Right.
that's another thing. And it's going to see if we can make that extra payment. We can fit that into your financials. So that's what that tells us there. You don't want it to be greater than 100% or one, because then that tells me that your business has more debt, you owe motor others, than you have assets. And that's not a good thing. You want to have more assets in your business than you were to have debts, right? Owing to other people. So that's important to measure if you're going to finance an asset, kind of. And if you have um, all of those four KPIs and you're seeing, and more of those KPIs are telling you not to purchase the asset, then go that way, and so on. So
Oh, that's awesome. Now, how on all these are they? You recommend to look at these quarterly or more than that, or when they need the equipment?
I would say that you should measure these four quarterly at least.
Okay.
Yeah.
Okay.
And then of course, if you're thinking about purchasing a new piece of equipment, you're going to measure this, and you're going to use a period in time, right? So let's say that, like, if you were right now, we're in the first quarter of the fiscal year. right? So
Mhm.
I would look at the first quarter numbers. Or if you want to look at an extended period of time, look at the rolling 12 months for profit and loss and balance sheet. Or you can even look at last year because we're so close within the year. Um, but you never want to just measure 1 month with the balance sheet KPIs because not a lot of things change on your balance sheet in 1 month. You're
Mhm.
not purchasing a new asset every single month or taking on a new loan. So um, it doesn't become as important to measure those kind of KPIs on a monthly basis, just
Mhm.
quarterly.
Okay.
But there are some KPIs you want to measure weekly as well. Um, and one of the things is you might want to look at your closing ratio
Mhm.
weekly to see how
Okay.
many bids you're closing on, and you want to measure that against sales, right?
Yeah.
See if you're
Yeah.
going to meet your sales goal. Things that you may want to measure daily is your productivity out in the field, stuff like
Yeah.
that.
Yeah. Do you think they should be looking at their revenue or sales too every so often, just to make sure they're staying on track, especially if they do create a budget?
Oh yeah, of course.
Yeah.
And I think there's an important thing to know. You need to know your break even sales,
Mhm.
right? And you need to know, okay, what is my target profit sales number? Okay,
Mhm.
so break even sales, what that means is how much uh, sales do I need to generate this month in order to break even? So that means you're not going to make any money, you're not going to lose any money. It's
Mhm.
at zero, right?
Yeah.
You want to know that number. You want to keep it in your head because, especially with a seasonal business, you want to make sure that you're at least hitting that number in the months where you're slower at, right?
Mhm.
Um, and then your target profit sales number is okay. Let's say if I said okay, I set a goal that I want to hit 15% profit this year. I need to generate X amount of sales to generate that profit. Um, so then you also want to keep that sales goal in mind per month that you need to make. A lot of people use that number to communicate with their sales staff, right?
Mhm.
This is how much you need to generate per month. And then you're keeping up with that weekly because you're able to hold your employees accountable to that number.
Sure. Sure. Yeah. Like in our academy, we teach them to create a budget, and they set their goal of whatever, how much they want to do in sales. And I was talking to one of our clients last year, and it was probably about three quarters of the way through the season. I'm like, oh, where you at in sales and everything? I'm like, I don't know. I'm like, okay, let's pull up and let's just look and see where you're at. And they're like, oh, we're not even close. Okay, well, this is something I guess is something I needed to work on, is better being a better teacher on. But I'm like, okay, we need to monitor this more often so you can stay on track, because if you're already that far behind and the season's already three quarters of the way through, you only have a few more months to try to catch up. And it was a big difference from what their sales goal was. So it's important to like learn some of these KPIs and track them.
Yeah, no, I have similar stories, but the clients that we do budgeting for,
Mhm.
whenever they don't meet um, their sales goal in 1 month, we have to spread it out in the next month because now they
Yeah.
need to play
Yep.
catch up so that they can make their goal, their revenue goal for the end of the year. But it's also important to add, even more important to track net profit goals. So I have
Mhm.
seen too where people may not meet their sales goal, but they exceeded their net profit goal because they were able to keep more expenses down.
Mhm.
And to me, I'd rather make more profit than hit my sales goal. I'm okay with
Yep. Yep. Yeah.
that.
Yep.
So keeping, I think one of the things is net profit, right? It becomes a big KPI, and I think it's important to keep your employees accountable to net profit as well, because then if you only keep them accountable to sales numbers, um, then they're not going to care about any of the other expenses that flow through the business, right?
Mhm.
Because you need to have them buy into, this is how much we need to stick with material costs, this is our direct labor ratio, this is how much we should be at gross profit, monitoring all of that. so that you can meet your net profit goals as well.
Yeah. We actually, Katie, my wife, she actually wrote a blog post years ago. We called it the $100 shovel. And it was more so just to teach our team members the importance of like just a simple shovel. You think it's, oh, I just broke it. I ran it over the piece of equipment, whatever it is. Well, it's not just a $20 shovel. The time we go get it and everything goes behind it, it adds up quite a bit. So I agree with you 100%. Like keeping your team in the loop on these certain numbers, and you don't have to tell them everything. You don't have to be telling them what you make, but at least I think it's really important to have kind of open book policy on some of those things. Is that something you see as well? Any
Yeah, no, of
benefits?
course, it becomes so important to have an open book policy at some extent, whatever you feel
Mhm.
comfortable with. You don't have to show all the numbers, but even as a business owner, sometimes even ourselves, we don't understand these costs. So how can we expect our employees to understand the costs
Mhm.
of things? And again, then it doesn't become about you and what I'm telling you to do and the hours that I'm telling you to work. It becomes about the business and what the business needs and what that is generating. So
Yeah.
if you do practice that open book policy and to whatever extent you want to, and you hold them accountable to these goals, then it becomes about the business. And I feel that people do want to hit their targets. They
Mhm.
want to have a goal in mind for themselves, so that they can hit that target. But I think a big aspect that becomes part of that is how do you get them to buy in? And I think so it becomes like you need to incentivize them too,
Mhm.
right? So if you're going to be sharing the numbers, what's in it for them?
Yep.
Maybe they get a bonus or commission. Um, they get promotions, they get performance evaluations, right? And then they get promoted. And it's good for culture too to
Mhm.
monitor KPIs, right? Because people feel a sense of pride when they reach a goal or get promoted, and everybody in the company sees. And I think that's really how you're going to be able to get the buy-in.
Mhm. Yeah, and I love what you said earlier about the productivity rates of the crew members. I think it's important to kind of share that and teach them why it's important and how they can affect that overall. So, um, anything with is there anything that they should be doing with that, or how do they actually go about figuring out that productivity rate? Do you have any
Yeah,
tips on that?
yeah, I think, um, yeah, it's kind of hard, right? Because it's kind of walking that fine line of, okay, you're not trying to micromanage your team
Hmm.
and monitor every minute too, but and kind of that's when those softer conversations kind of come into play. But I think that, knowing how much billable and unbillable hours that each team member has, right? And
Hmm.
then how much you have scheduled out for the day or week, right? And measuring it against that. And you as a business owner have to know how long it takes to do a job,
Hmm.
because and also your productivity rate may be, you may be more productive and work at a faster pace than your employees, right? So you can't, as much as you want them, you want to hold them to that productivity standard. It's never going to be like you as a business owner. It's just never going to be that. But if it takes you an hour to do something, maybe it'll take them an hour and a half. You want to add that buffer in and measure them against that. But I would never give my employees something that I never worked on and say, here, well, they'll figure it out and we'll see how much hours it takes them. I think that's one of the biggest problems in any industry is knowing how long things take, the square footage of something, the cost of something, how many minutes, right, per lawn, right, you're going to mow, stuff like that is something that you need to build a database for. And then
Hmm.
you can hold your team members accountable to that.
Yeah, and that's exactly what we do. We teach is you can actually play or create the bonus systems based on that because they can have the numbers up. Like I've been to companies where they actually had like a productivity rate up on the not calendar whiteboard,
Yeah.
and the crews would come in there and actually create a competition between the crews who can get the highest rate, and then whoever the winner was that what I think it was quarterly, they had like a luncheon for them that they can come and get a full decked out lunch and stuff like that just to reward them through that. So yeah, there's all kinds of things you could do once you start monitoring these numbers.
Yeah, exactly. Exactly. And I think it will take a long time to gather this information if
Mm-hmm.
you're someone who has never timed yourself or have never really looked at the cost of something. It's not something where you're just gonna figure it out the next day. I think it's gonna
Mm-hmm.
take a whole season of doing something and tracking, and then maybe for next year you have a good place to start from.
Yeah, absolutely. I used to actually go out there as before we had the smartphones. I literally had a stopwatch, and I would time my team how long it put a gallon plant in, how long it took to put in a 2-inch tree, and I timed everything, and that's how I was able to create our production rates because of that. So, but then I had, like you said, that database, but it didn't happen overnight. It took months and months of gathering information because I didn't want to be out there like watching every single detail and then, like they think I'm monitoring, micromanaging them. No, I'm just trying to get some data so I can estimate better. And I had to explain this to them, but once they understood and why I was doing it, they were on board with it. But it just took a bit to explain it to them.
Oh yeah, definitely. And also, I hear a lot of horror stories like clocking in and out of jobs. They don't do it. We can't hold them
Mhm.
accountable to it and stuff like that. So I like your approach. You just went out there with the stopwatch and you did it
Yeah,
yourself.
I did. I did. I did. Yeah. Yeah. I like was out there literally with a stopwatch and a piece of paper and I jotted down everything. And then, well, now like there are some companies out there that do have some industry like production rates that are out there.
Yeah.
This is something that we have in our academy. We share those with them just to
Wow.
get them started. You don't have to do all the timing yourself, but
Right.
it is important. Now, is there any other KPIs that you recommend they watch and monitor?
Oh,
Or is
let's
that pretty
see.
much it? I think we went quite a few there.
Yeah. Well, oh yeah. So revenue per employee.
Okay.
So revenue divided by the number of employees you have. This one will help you monitor the capacity of each employee that you do have and how much revenue they can take on and have taken on in the past. It's going to help you with hiring. When do you need
Mhm.
when do you need to hire your next employee? So let's say that for last year you did this calculation and every employee produced 100,000 in revenue, and this year you have $300,000 more in revenue scheduled out for the year, then you're going to need three more employees.
Mhm.
It's really easy to keep track of capacity planning is super important, because you don't want to lose quality of service because you didn't have enough team members, or also you don't want to lose out on potential sales because you don't know when you need an extra employee, right?
Mhm.
So I think it just alleviates a lot of headaches. And let's say that you take on an employee, you can also take on an employee before, right? As an investment, you're going to take on an employee before you see them taking on 50,000 worth of revenue, and maybe when they get to that 50,000 you have to start interviewing people again because this employee is now going to be up to capacity for the year.
I like that. Is that full time employee
Yes,
on that?
full-time
Okay.
equivalent.
Okay. Okay.
Yeah, so 2080 hours a year. And a lot of people have to do it that way within this industry because it's seasonal. So you may be
Mhm.
working 8 months out of the year, doesn't equate to, a full time equivalent. So you want to get full time equivalent 2080 hours a year.
Okay. Okay. So, do you have anything like horror stories of somebody that doesn't monitor these KPIs? I mean, do you see anything that bad happens when people don't monitor these?
Yeah, no, of course. I think people are scared of knowing the truth sometimes, right? And they try to avoid Just even having an accurate profit and loss and balance sheet, or sometimes you just don't understand and you're like out of sight out of mind. I don't
Mhm.
want to know a profit and loss. I don't even know how that will benefit me. But you know someone like Apple didn't get to where they're at just by avoiding their financial statements, right? So if you're serious about your business and you do want to maintain a healthy company, um, not even if you want to grow, you don't have to be a big company, but you want to be a healthy company, provide for your employees and yourself, then you do have to get serious about tracking your financial statements and then tracking these KPIs. And what I have seen is, um, like I said, we get a lot of cleanup jobs when there have been years and years and years of bookkeeping that hasn't been done. And what I see is that when they haven't been doing their bookkeeping for so long and haven't had that financial clarity, making decisions off of the financial statement, is that they were having cash flow issues, right? People were breaking even and not
Mhm.
making any money, or even worse, in the negative, not making any money and losing money. Um, and so once we get them caught up, we look at these KPIs, we look at okay, these are the top three things that you need to improve, right? Maybe you need to buy less assets, work on efficiency, monitor utility expenses, whatever it is, right? And when we see that they're really focusing on that after a few months or a year that they've been working with us, we do see that turnaround, right?
Mhm.
We see that they're building a healthier company because now they're making decisions based off of their financials. They have an accountant, right? You're doing the right thing. And if and us as accountants, we get so much gratitude, like gratitude towards us, because now they know their numbers and they're
Mhm.
happy that they don't have to worry about, also for taxes, right? They have to file their taxes, so they don't have to worry about not having financial statements for that as well. So, and it's nice for us to see these companies succeed too.
Yeah, yeah. I love that same feeling because, well, that's one reason why we started our academy is because we have in this area here, we're just out of the suburbs of Chicago. So there's tons of landscape companies. We see so many companies come and go in this area, and like, why is that? And it's because they're really not monitoring their numbers. They're just doing out sales and putting in the work, and that's it. And they go out of business, or their wife's like, you need to get a job because you're not making any money here. So it's a troublesome to see them like that, and that's why one of the reasons why we started doing this.
Yeah.
Um, I can share that and this is probably 15 to 20 years ago, we had a consultant come in and start looking at some of our numbers. We weren't monitoring them either. And we found we lost $159,000 that year in just unproductive time, unbillable time, because we weren't monitoring it. We didn't have all the system procedures in place, things to get
Wow.
guys in line. But if we didn't see that number, we'd have probably just kept going the way we were, and it wouldn't have ended well.
Wow.
But once we saw that, it's like, holy cow! Just seeing those numbers come out, it's like, wow, this is a game changer
Yeah.
here. So it is so important to monitor your numbers. So important.
Yeah. You just actually just reminded me of something that we saw last week. I was in a meeting with a client. We were benchmarking their rent expense, and their rent expense was over like two times what the industry average is.
Wow.
And we had pointed that out. I'm sorry, we had pointed that out a month ago. We meet with them again this month, right? And she tells us, I went back to my contract, my rental contract, and I find out that my landlord has been charging me more than I should have been charged because the square footage on the contract is for a larger space, and they're not in that larger space.
Huh.
So just even looking at the benchmarking helped her so much. Now she's trying to get all of that money back that she's already paid from this contract. So I mean, even with your story, it's just like these things just get uncovered. And how can
Mhm.
it if you don't have financials, right?
Yeah, yeah, exactly, exactly. And that, honestly, from that point forward, that was like it was like flipping a light switch on for us. Like, oh, we got to change stuff. We have to start monitoring our numbers, and that's what really set us off on our journey. And but it wasn't until we started really diving in. That's why I love what you guys do, and I love how you guys help advise people on this stuff because they need it. We need it. So thank you there. Now, and is this something that like any size company should be monitoring, whether they're a single person or a larger company?
Oh yeah, of course. Yeah, if you're a solopreneur just starting out, or if you are an established business, have been in business for many years, you should do it at any point. I like meeting with solo operators the most, to be honest. Or maybe I shouldn't say that, but because I feel that there's so much potential there. Because you can catch things early if you're tracking these KPIs. You rectify it yourself before you bring on employees, and you save yourself the headache, right? And so a lot of the times, what we see is when you're a small business, maybe you're not paying yourself on the books. You're kind of just taking money out whenever you need it. It's not consistent pay. So when we look at the profit and loss and we do the benchmarking, we always take those personal expenses and add them back into the profit and loss. Although that's the accounting people would come after me for that. We do it because we need to put a salary for you. As a business owner, you need to get paid. Even if you're not doing it by paycheck, we're going to put that in there for you and we're going to show you the true picture of what your net profit is. So a lot of the times when you're a small business, you don't pay yourself through payroll, it's not going to be on your profit and loss report, right? As salaries, and you might think that you're making a high profit, but then you didn't pay yourself anything. And it's like, okay, so that's why we add that back in to show you the true picture. So, no, to answer your question, everybody should be monitoring KPIs.
I love it. Love it. Well, Carla, is there anything else you wanted to add? Any other thing that we didn't talk about here?
Nope, I think we
Okay.
covered everything.
Okay.
Or
Well, I did. Oh, go ahead. I'm sorry.
no, you go.
I was saying, no, I appreciate your time today, and you shared a wealth of knowledge. Like anybody's listening out there, you may have to go back and re-listen, jot down all these formulas and stuff, and really start diving in your numbers. And if your books are a mess, reach out to Carla and her team. They can help you get things situated and allow you to be able to make these changes and make adjustments in your business. So I encourage you to reach out to her. Carla, thank you again. How can people reach out to you?
Yeah, you can visit our Facebook group called Landscaping Accountant. Direct message us there, or email me at carlap@cyclecpa.com. And I want to thank you too for having me on. This was a lot of fun.
Yeah, thank you. Thank you. And get in that Facebook group because she does a lot of different webinars and has different people on. So it's a great wealth of information there. So definitely get into that Facebook group if you're not in already. All right, Carla. Well, again, thank you so much. I appreciate your knowledge and I appreciate working with you and I appreciate everything your team does. So thank you.
Yeah, no, thank you.
Yep. Have a great day, Carla.
You too.